Good evening, everybody, and welcome to tonight's property webinar. Thanks, everyone, for joining. I'll try and give you as much value as I can in the hour, maybe hour and 15, and we'll take some questions at the end. So just from my side, my name is Jeanine Sciacca. I'm a senior consultant for 2020 Property Advisory, and I've been that since 2015. So I'll tell you about the details in the company as we go forward. Just in opening, I thought maybe it would be a good idea because someone asked before we started the recording, like why they joined, and someone wanted to know how I got into it, if that's how I got into it. Yep, there's a question from one of the participants, Trisha. So just my brief story. I immigrated to Australia in 2009, just the end of the year, so basically 2010. And I was a property investor in South Africa. So I decided to buy an investment property, and I met with some, I don't know who, this particular company, and I didn't really know much about the Australian market at all. So I trusted this person, and I bought a property back then in Geelong. It was not from 2020 Property. It was some other group. And they said to me, oh, this is the fastest growing suburb in Australia, which was somewhere near Geelong called Kaluas. So anyway, I bought this 4-bedroom house and land package, brand new, off the plan. Anyway, in 2012, I wanted to invest again. So I got hold of my broker to find out my capacity, and she said, have you met Mike Anderson? So I said, no. She was, oh, okay, you have to meet Mike Anderson. So I said, why? So I said, no, just meet with him before you buy anything. So I did, and the broker and Mike actually came together to my house one Saturday, and Mike started asking me some questions about what I wanted to do, how I wanted to do it, what my objectives were. Then he said, do you own anything? I said, yes, I've owned this property in Kaluas near Geelong. So he said, what made you buy there? So I said, oh, no, it's the fastest growing suburb in Australia. So he said, no, it's not, just like that. So I said, no, it is. So he said, no, it's definitely not. I said, I've even got it in writing. So he said, where? I said, upstairs. He said, bring it. So I brought the file that they did the whole pack with, and he goes, Jeanine, what they're measuring as growth is, this used to be farms, and there was one house, and now there's like 3 houses. So that's 300% or whatever the percentage was. So he said, that's not how you measure growth. He said, growth must be the value of the property must go up. And he said, this isn't going to grow. If I was you, I'd sell it. So I thought, oh, he's just saying that, and I'm not going to sell it. Property never goes down in value. It's not going to go down. Anyway, I really liked Mike. He had property research knowledge that I've never, seen anybody with that amount of knowledge of the whole country. And so then I got interested. He found the 2 properties for me that were the right thing for me. And then he said, can I pick you up on this day? And he took me around. This was back in 2012. So at that stage, it was Central Coast. And he took me on a 3-hour tour there of the area and all the infrastructure changes and what was the reasons for growth. And then the other property I bought was southwest of Sydney in Bardia. And he took me on another day, a 3-hour tour all around the area, and said to me, that train line that they're putting in there is going to make property prices, increase significantly. So anyway, those 2 properties that I bought from Mike just did so well. And the research he gave me, and he helped me through everything, through the contract process, everything, that kind of support. And he kept asking me, we used to stay in contact, do I still have that Geelong property? And I said, yes. And he said, you should sell it. It's going to go down. I thought, properties don't go down in value. I saw him the next year. This is like 2014. He asked me again, same discussion. You should sell it. Anyway, I never did. I just don't know why I never did. After a couple of years, the properties I bought from Mike did extremely well, and I decided to offload the one because we peaked in the market in Sydney around 2015-16. We really got the best prices then. So I sold the one, and Mike said to me at the time, have you still got that Geelong property? I said, yes. He said, Gina, I promise you, find out its value. And he was right. I had a brand new 4-bedroom house there for 6 years. It went down in value. It was worth $35,000 less than when I bought it. And he said to me, this is the time to sell it when you're selling your one that's made a lot of money in Bardia, southwest of Sydney. That one made $180,000. They said, sell the other one and the loss will offset the capital gains tax and just help you financially that way. So I did offload it. I freed up some capacity, bought something else from Mike. So in those 2 to 3 years, I'd done so well. I referred so many people to Mike. Everybody I spoke to about what I was doing and how well I'd done, I referred to Mike. And I just, when I met him, thought, geez, I don't even think this guy works. He lives the dream, you know, how he does it. I love property, passionate about it. And then my lucky star shone over me, or I don't know, I was very, very blessed. In 2015, I called him for some other reason. I wanted to renovate properties to get out of corporate, and I called him to ask him if he'd like a share of the profits, if he helps me just with the suburb, because he does all this research. And he said, don't worry about renovating. He said, come sell for me. So that was the biggest blessing. I have to say that. I've written a book called Living in the Flow, and Mike's mentioned, he's the only person in the book that's been mentioned twice. He honestly has been one of the greatest blessings in my life, and I'm committed to working under his brand for as long as I possibly can. He's the owner of 2020 Property Advisory. I'll just show you who he is. And there he is, that's Mike. And he's got over 25 years, that information says 20 plus, but it's 25 years of experience. He started off in financial planning, so he's very, very knowledgeable with structures and trusts, and there's another question he can't answer. He then also did finance for a couple of years, so he understands debt and equity very, very well. And then over the 25 years, Mike has done both property sales as well as developments. He's done residential, he's done industrial, he's done commercial. So for the most part of the 25 years, Mike did property research. So when he was a financial planner, he kept himself, he was investing in property, and he kept wanting clients to keep their wealth or grow their wealth further in property. But financial planners don't talk about property because they get their income from other things, shares and the share market and so on. So eventually left that because he really had such a passion about how you grow wealth significantly through property. And he did it himself, and then he started to help people with it, and that's what he's been doing for the most part. So we're a small little team. We're not a massive property group that pushes 300 people through a seminar. That's not our game. We don't even want to do that. We are small. We only work with, the only business we get is from referrals or word of mouth. We don't advertise a dollar. Mike hasn't in all 25 years advertised his business ever. We do a reasonable amount of properties, about 200 to 250 a year. Pearlie works at the office, and she also sells like I do. And then the other two people is, one is Helen does our finances and Ola does the marketing, and then there's Mike who owns it. So we're a small boutique business, and we care about long-term relationships. Mike's first clients that started with him 20 plus years ago are still his clients to this day. They're just much, much wealthier, and they've grown their wealth over the years. So I know all my clients. Mike knows every one of my clients, everyone, since 2015 when I joined him. So we really do continue our relationships, and that's the philosophy of our business. So in terms of our business model, what we do, as I said, we're a research-based property advisory business. The thing that we look for is a mismatch in supply and demand. It's basic economics. If there's no supply and a very high demand, prices go up. And if there's too much supply and no demand, prices go down. So we look for that mismatch on a national level. So we do look across the entire country of Australia. And over 20 plus years, Mike has done everywhere. He's done Perth. He's even done Broome, Darwin, Melbourne, Sydney, Central Coast, Brisbane. So it's been all around the country over the years. So the cycles go in waves, and that's why we do help clients invest, and it depends, could be anywhere. So right now it is Queensland, and I'll get into that. So once we know the state, we then go to the local government area, have a look at that, and then we look for the reasons for population growth, and that's usually related to employment. Okay, if there's new jobs, then people move into the area to work there, and the demand for residential goes up. Now, there's got to be also the other side of it, which is a constraint on supply. And if both of those are there, then we really get serious about the area. Then we start looking at the demographics. What is it? Are they singles, like in Sunshine Coast? So many singles. and couples, so many, because of the biggest hospital in the Southern Hemisphere. Lots of nurses and doctors from overseas and some from around the country. So they want 1 and 2 bedders. So we need to know, is it that, or is it a 4-bedroom house for a bustling family kind of thing? And then we look at the infrastructure changes. This is the reason for the triggers for growth. And once we understand all of this, we then look for the entry options. What are we going to get into? Is it going to be a 2-bedroom townhouse? Is it going to be a 4-bedroom house? What's it going to be? Then what we look at, which I believe makes 2020 property advisory different, is we look at exit point. Okay? I don't know anyone who sells property, and I've never met anyone who sells property who talks about exit point. What we mean by exit point is we ask ourselves before we buy the property, who would buy this off you for a significant profit 5 years from now? And why would they pay more for it? If you can answer that question before you've bought it, you're buying the right property. When I bought that thing in Geelong, I just call it that thing because it didn't do anything except cost me a lot of money. The person never spoke about exit. They just said, you know, buy this thing and have a nice day. I never ever heard from the person again. And I don't know what they think. So if you think a property takes 20 years or 10 years to grow, it's not the right property. So the way we do the research is we see results for our clients anything between 3 to 5 years usually. We've got better results than that very often. I'll even show you at the end some of the results of our clients, what they've achieved in far shorter time than that. But we're not here to do quick, get rich quick schemes. We don't do that. We're a proper, steady, manage the risk, manage everything with the best results, because our client's performance is our business. If a client doesn't perform, we don't have a business. So our priority is that the client gets the performance. And if they do, they'll refer their brother, their sister, their friend, their colleague at work. And that's how we've built the business and continue to grow. So once we understand all of that, we then get hold of the client. We do this in these steps. They start here at about 1 o'clock. We'll meet the client for meeting number 1, understand their objective and their goals. What do they want to do? Why do they want the property? And this is a very important question. We're not here to just sell a property. We want to know why you want this property. Is it because you want to boost your retirement savings? Is it because you want to afford private school fees in a few years' time? Do you want to pay the mortgage down on your own home? What is it? What's your goal? Then we define your capacity. You'll get that from your broker, but we can work that out too, and we just confirm it with a broker. And then we educate you with this research that we've done. Then if you like what we've said and you're interested in, you know, wanting to invest, we make meeting number 2. Meeting number 2, we come back, where's my mouse, and present options to you based on the information we gathered on meeting 1. We'll show you the best one thing that suits your situation. We're not going to come with 3 things and 4 things. And please understand, that's for your benefit, not our benefit, because we do the thorough due diligence on meeting 1. So we'll present an option to you and why we think it's right for you. If you like it, we say, great. Right now it's Queensland. We'll say, get on a plane. Let's go there. I'll pick you up personally in a hired car, and I'll take you around for about 3 hours and show you all the reasons why we've chosen that suburb. And you'll be very excited once you've seen the area, because there's no research like on the ground. You should never buy a property without seeing it, okay? I don't care who you are and how many properties you've got. I don't believe anyone should buy property. If you're going to spend $500,000, you may as well spend $300 to fly in and out to wherever, Brisbane or Sunshine Coast or whatever it is, for the day, and see the area so you really understand it. And in that flight, we will show you the infrastructure changes and the reasons for our choice, and we'll show you the developer. You'll probably meet them. We'll probably be able to also introduce you to the property manager most of the time. We'll show you an example of what they've built, even if it's another suburb or a display home. And we'll also show you what competes with the asset we're presenting. So once you've seen what competes with the asset we're presenting, you'll know for sure this is if you were coming in this area to rent, you definitely want this one. And in a couple of years' time, if you came in there to buy in the area, you definitely want this one. So once you're excited and you're happy, you come back, and then you go through the process of the contract signing and going the whole route, which we support you on. So it says here, implement, plan, support. We personally don't do it as 2020 property, but we I've got the contacts in the industry. So we help you. If you need this, we can help you. If you need a broker, if you need insurance, if you need, so for a depreciation schedule, our clients get about a 50% discount from BMT. You'd pay $750 for a depreciation report, $750. With us, it's about $330. We'd help you with, definitely, we choose the managing agent. You don't choose them. You can if you want to, but why would you not go with the managing agent that we chose? Because if we sell a couple of properties in a certain development, then we've got maybe 10 or whatever it may be, and we take one property manager to manage all 10. So they do the right thing by our clients, absolutely, because if they don't lose one client, they lose 10. So we don't generally have any problems at all with our property managers. They're wonderful people. So we help you with that whole thing, and then even the handover process for the inspection to hand the property over. We help you with all of that, and then we review your portfolio over the years that you hold the property. And someone asked the question: they asked, what do we do once you've bought it? You're curious, once you buy, what's the process? So that's the last quadrant there. We review the portfolio ongoing. So at least once a year, once every 12 to 18 months, you'll get an email from us with every suburb that we've put clients into. And so, for example, we started in Queensland in 2016. Okay, we got in the market really early. So any client who bought then, whatever suburbs those were, they are still part of our update report that comes out every 12 to 18 months. And they'll tell you buy, hold, or sell. And we'll tell you why. Now, you don't have to. It's up to you if you want to sell or hold. But I'll show you why we recommend exiting a market when it's reached its peak. This is the reason why you sell. So we know the property market grows on average at 8% a year, but it doesn't grow in a straight line. It grows like that. There's these short, sharp upswings in growth. So everyone look at the screen. If you're making notes, look at the screen. There's that short, sharp upswing in growth, followed by a long period of stagnation. So if you think about the Sydney market, if anyone knows, if they live in Sydney, between the year 2000 and 2003, the Sydney market shot off. Then it did not move for 10 years. You might not remember that, but a property did nothing between 2003 and about 2012. 2012, it shot off again. So that's how the market goes. And generally, when one market cools off, another market takes off. And when that market cools off, another market takes off. So when you understand this, which is what we do, this is what we specialize in through our research, you can be very successful in creating wealth. So that's the theory. Let me show you in practice. As I said, in 2000 to 2003, the Sydney market took off. So this was an actual client. The property prices back then were here around 250,000, 285. The market took off, and look, there's that long period of stagnation that I spoke about. It started here at about 2012 to start moving. So we told clients here in 2003 to sell their Sydney property and invest in Perth. That was our next market according to the research. The line, where's my mouse, starts slightly below that because we understand you're going to pay capital gains tax, you're going to pay agents' commission, stamp duty, and legal fees on the new one. And the prices were slightly lower. So you get in there, but all your exit and entry costs you make back in 6 months or so, and then it shoots off again. Then the growth takes off. So we told clients after a couple of years in Perth, sell, we're going to Darwin. Again, capital gains tax, agents' commission, stamp duty, and legal fees, prices a bit lower. Make back that money in a couple of months, and it shoots off again. Then we told clients, according to the research, get out of Darwin, we're going to Melbourne. And this is exactly what happened. So it's nice to see that the market's never always perfect, which it never, I mean, it's not, it's real what we have here. And then when we got to 2012, we told our clients, sell everything in your portfolio. We recommend that you put all your proceeds into Sydney. And as you can see, Sydney went absolutely nuts in those years up to 2016. So I just want to tell you the difference between an exit strategy, when you exit a market at its peak and manage your portfolio, versus this long-term buy and hold, long-term hold strategy, in this person's example of this guy that did hold, this is a client's numbers, and another client who just followed our strategy and just said yes whenever we said sell, now we're moving there. They just did that. $880,000 better off in a period of 15 years. This is with one property, started with one property. So a managed portfolio makes way more money. And when I met Mike, I just want to tell you, so you know that I'm a convert. When I met Mike and he said, oh, you won't hold the property for more than a couple of years. This is the Bardia one. Once we've got the growth, we will sell, take the money and go again. And in my back of my mind, I'm thinking, I'm not going to say anything right now, but I'm not selling this property. I don't ever sell property. Why? Because my dad said that. Why? Because his parents said that, and my mom's parents said that. So my grandparents said that. Never sell a property. Well, you can see here that I was completely wrong. And Mike kept saying to me, no, don't hold it, sell it. You can make the same money again. You've already made 150, 200,000. Let's go over there. We can do it again in the next 3 to 5 years. I'm thinking, no, you don't sell it. Then he said, Jeanine, I promise you make more money. And he sat me down there one day with a pen and a paper and a calculator, and he went through a 10-year period. And I thought, oh, now I understand. And now we just put it in an illustration for clients. And well, I do. I put it into the webinar so people understand how I changed from my philosophy or my strategy, thinking you never sell a property. You make a lot more money with a managed portfolio. So we help clients with this. This is our specialty. This is what we tell people to guide them. Obviously, we don't force you to sell, it's up to you, but we do guide you. So just to tell you, with the exit point strategy, we've been now in Queensland since 2016. We already now, these times now already allow us to implement the exit strategy that we do and help people get out of the properties they bought in, it says they're 2 to 7 years ago. So some properties were 7 years ago and others were just in the last 2 years. We've seen significant growth in certain areas. Clients have made really good money. Some have made over 300,000 on a house in the Springfield area. So we said we've peaked out there, take the profit, let's go again and roll into new markets. So we are facilitating the sale of client investments that have made significant capital gains. And this helps them to reduce the debt on their own home. So if you do have your own home and you do have debt on it, a loan on it, if you bought an investment property, that would be the goal. We would really recommend that. The goal is to make big chunks of money every 3 to 5 years, 200,000, whatever it is, and put it on your mortgage on your own home and bring it down, because there's zero benefit in the interest you pay on your own home. But there's a good benefit to the interest you have on an investment property because it's tax deductible. So that's good debt. But your own home, bad debt. So especially in high interest rates, it's just ridiculous how much more you pay for your house than the price. It's like imagine going to an open day and you're buying $1 million home. But as you want to sign for it, the person says, hey, you're actually paying $2.5 million for this house. I said, no, it's $1 million. He said, no, you're going to pay 2.5. Would you buy it? Probably not. That's the interest. So that's why we don't want to pay any interest on our own home. But on an investment property, you can have an interest-only loan. It's fine for tax deductions. So this also allows for reinvestment into new tax-effective growth assets, exactly, and happy clients. So we go from the one into the next market. So 5 major reasons why we believe it's a great time to enter the property market. They said the best time to enter the market was 5 years ago. It's always a great time, but really now. So we're talking about property supply and demand. So the net migration, so that's net, including in and out. The net is at a record high. We had 550,000 people come in the country last year because at COVID, they closed the borders and there was this like waiting for students, for people to immigrate. The long-term average is only 180,000 a year. I remember when I immigrated, that was the exact number. It was 180,000 people. So 550 last year. How much that is? It's huge. And the building approvals are so low. They're the lowest in 12 years at 162,000 last year. So can you see this gap? I don't know if you're aware. I don't know what you know and what you don't know, but all I can tell you is that there is a massive crisis, a chronic shortage of property in Australia, and it's significant in Queensland. Okay, it's the most chronic shortage in Queensland. So I've got this property is massively undersupplied. We do have a crisis. and they're not going to catch up for many years because there's just not enough building approvals being done for the amount of people coming in. And we're talking interstate as well as international migration. It's a good time to enter. Inflation, they say, it's peaked. Look, even if it hasn't peaked, the property prices are doing really well. They expect interest rates to go down, but no one really knows. In my book, in my view, the way I see it, and I've got several investment properties, I'd buy another one tomorrow. It doesn't matter on the interest rates because everything goes in waves. And no matter what you do, in a couple of years' time, you'd have made good money. The labor force is very good. Unemployment's at a low rate, which is great. So if you look at this, between the dwelling approvals in the blue line and the net arrivals in the red line, can you just see how crazy this chart looks? It hasn't looked like this since 1984. That's how the chart goes as far back. So we really do have a chronic shortage of property in Australia. Here's the top of the waves. Look at the headline: building approvals in Australia at decade lows. We have a chronic shortage of dwellings, and the gap between supply and demand widens further. So we've got 13 interest rates, stubbornly high inflation, wages not moving much, new economic data suggesting Australia's economic growth is slowing, but it's not true. Our housing market keeps moving forward. I just want to also mention something. Please be very, very, very careful when you look at media headlines. I haven't done it in this presentation, but in my older ones, which you'll find on my YouTube channel, if you want to go and have a look, it's Silver Method Australia, my YouTube channel. I've got other property webinars there. I usually put about 5 media headlines that are current or in the last couple of months on there, and some from a year ago, and some from 2 years ago, 3 years ago, and 5 years ago. And every one of them is wrong. Okay, so please don't listen to the media. They hardly ever right. During COVID, they were saying all kinds of things. The property market's going to crash. Property prices are going to drop 80%. During COVID, we had such significant growth. Our property clients in Queensland made several hundred thousand in the COVID period. So please be aware of the media headlines and be careful what you ask us. If you like, we'll tell you the answer for free. Okay, a lack of supply is making it harder for people to buy or rent. So this is the rental vacancy in the blue line. A balanced market is the 3%, and it's all the way down here. I can tell you that in Queensland, in Sunshine Coast, in our areas in Brisbane and in Townsville, we'll be also looking at that market now. It is not even here, it's 0. So you literally, if you had to, a tenant leave today, they would have cleaned the property today and handed over the keys to someone else tomorrow because there's nowhere to stay. It is so chronically short there. We had an open home, a townhouse, and we had 50 people go through that on the first day of the open day. And we had people putting down 6 to 12 months rent, cash, willing to pay it on the table, saying, please, we want to have the property. So rental market's very strong. Just to give you a bit of broader view, what's happening in Sydney and Melbourne, even if we have clients ask us, we will not put a client into Sydney or Melbourne at all as an investment property. Both of these markets have definitely peaked and they unaffordable. Their rental yields are very low. It's just not an investor's market. To buy your own home, absolutely go ahead if that's what you want to do. But from an investment point of view, no. Just to also share, we're not looking at Perth market. There's a lot of media noise on Perth. It's too volatile. It's too dependent on resources and mining. And if anything goes wrong anywhere else or in China, for example, it affects that whole market. So we always look for many pillars of employment that the market is not dependent on one pillar like mining. Because if that moves left or right, the whole market can so volatile, can swing. So we're not doing Perth, even though some people are making money there, but we wouldn't put our clients in there because we got a more stable, higher growth, better than average market somewhere else that our research points to. So Southeast Queensland is where we're looking at. It's one of the strongest property markets, and through that COVID period, it was phenomenal. And it continues to be our best investment market. Let's see why. So this is, people fled the southern states for Queensland. This is 2020, the beginning of COVID. COVID caused 30,000 people interstate to migrate into Queensland. This was like an absolute way above any. It's like the highest they've seen in years and years and years. It was like a record. We thought we'll never see that again. It's unbelievable. Then what happened was, by 2022, that number went to 53,000. So can you see? And the states are not doing anything, or people are leaving. They're leaving and they're going to Queensland because of affordability, weather. So if you look at this trend, this is going all the way back there. If you just look at New South Wales, how it's got like a mirror image with a red line, which is Queensland. So remember when I said that in 2000 to 2003, the Sydney market took off? So this is when the prices went up, people left. This is migration, okay? This is interstate migration is the chart. So as the prices went up between 2000 and 2003, people left. It became unaffordable. Where did they go? Into Queensland. That's the one that affects the other one, because the other two lines kind of are more interrelated, the green and the yellow, but Sydney and Brisbane have got a bigger relationship. Then what happened was the prices in Queensland went up. As they went up, people left and they came back to Sydney. Jump all ahead here. Let me just move this across. And you can see here, we started putting clients into Queensland exactly, around about 2016. The prices in Sydney started to go up in 2012. People started to leave, became more expensive. There they moved here into Queensland. Now this has gone beyond. It's even higher. If I showed you that chart in the previous slide, when I said, let me just go there, 53,000. So imagine this red line is way above this white line, because there's 50, all the way up there. So you can expect exactly what's going on here, this expanding the pinch point. So as prices move and they come back, this is the trend, and that's why we're in that market, because this is becoming unaffordable. Just looking at the median house prices, even if the numbers aren't exactly to the date perfect, they're still indicative. To think about a Sydney home where the average household income is around, let's say, 107, or even if it's 110, is pretty much similar in Brisbane, like hardly any difference, 10% out. But this is 9 times the household income, whereas here it's 5.5 times. So the burden on the household disposable income is completely different. Affordability of buying a beautiful 4-bedroom home or whatever it is in Brisbane, you've got so much more money to spend compared to being in Sydney. So this is why many people from Sydney are moving to Queensland, and from all states, in fact, from this affordability factor. We've now been looking at Townsville for several years. Mike's been going there on and off for a couple of years to check it out. And now this year, he's probably there on average once a week, and has been for many weeks. And we're now at the right time to enter the Townsville market. So people might think, oh, it's such a small regional place, but in far north Queensland, this is the main town, and the population growth is going to be the largest over there. So the numbers you can't compare to Sydney or Melbourne. It's not like that, but relative to itself there, this is going to be the largest growth in population. The housing supply is really short. I don't have all the numbers here, but the net sum up of what the demand is, how many they're building, there's going to be a shortfall of 400 dwellings every year. So they can't keep up. They already now are short supplied. So I was there just last weekend. Yeah, I was there last weekend. Beautiful here along the water, place called the Strand. Anyway, up here is a Stockland project, and very nice here. There's lots of retail, lots of infrastructure, very pretty. Down here, there's nothing going on. There's no shops. It's like you're going in the middle of nowhere. Lend-Lease has got some big estate there, so we're not going there. There's really nothing there. No one wants to travel there, even though it's not that far. It's quite spread out, Townsville, and this is just, no, we aren't going there. This is a low socioeconomic area. We're not interested in that. We're staying far away from that. This is closer to the city centre. There's lots of stuff going on here. But the best suburb and the best growth area for us is up here, and this is where we are. Now, we've got a project here that's not Stocklands. It's another developer that Mike has known for, I don't know, maybe 15 to 20 years, somewhere there. And he got a big pocket of land, and his land price is about 20 to 30% less expensive than Stockland's land price. So we really think as an entry, it's a really good option to get in. It's here in a place called Mount Low. Very pretty. It's really pretty. It's got all these beautiful trees, and there's a creek in the suburb. You can, on the walkways along the creek, really a very pretty suburb. Just to show you, when we talk about compared to Perth, for example, that's too dependent on mining, how many wonderful industries there are, like a spread here in Townsville. You can see that, so the biggest army barracks in the country is there. There's also healthcare, public administration, big retail, construction. There's education and training. So we really like the spread there. And then, of course, this this nickel refinery. So if anyone, I didn't know this, but this nickel refinery is, it was sold, it was, what's his name? Palmer. It was his. Anyway, this is now open, and apparently the byproduct of refining nickel is cobalt, and it washes off into like these cobalt dams. And they've now estimated the value of the cobalt, which is used for all technology and things to make them, is at 13, not million, billion, $13 billion. So I haven't even put it on the slide here, but that's right now. There's an overseas company looking to buy it. It's going through the Foreign Investment Review Board. And if they do buy it, Townsville's going to go nuts. If they don't buy it, Townsville's going to do very, very well as a property market because of all these other things. The biggest military base there, this hospital upgrade. So they've got a very good employment sector there in the medical industry. People worried about petty crime there. Yes, there's always some things about some silly kids doing some stupid things, racing cars or stealing them or whatever. So they're investing 100 million in a police academy there. That is significant money, especially for a place like Townsville. And that's really given us a lot of confidence. And also the suburb where we are doesn't have any of that. It's all the way down south where I showed you earlier. And then all these other things on the screen here. So there's the point of this slide is there's not millions being invested in Townsville, a small place like this. It's billions. Also, this power supply to the mining is a massive, massive project. So lots happening there, a lot of jobs coming there, even from infrastructure, this whole casino. I actually stayed there. It's a place called Ardo. If you want to look at it on bookings.com, it's absolutely stunning. My hotel room, it was just beautiful. So they've redone this old hotel that was there a couple of years ago. If you went there 10 years ago, say, oh, it's a bit tired. It's absolutely stunning. It's completely refurbed. It's magnificent. This whole area is beautiful. So you can see there's a lot going on. They've got the football stadium. Pink played in Townsville when she was here. The airport's close by. This is the area that we're in over here. The refineries over here. There's nothing. It's not too close. It might look like it on the map. You can't see it. You can't smell it. It's nowhere close. But it's very well located where a lot of this massive investment is taking place. So the reasons to invest in Queensland, well, the population growth, fastest growing in Australia, very strong economy. The best thing about it is the diverse industries. There's continuously increasing employment opportunities, major infrastructure development there, state government, significant infrastructure projects, billions being spent there. The rental yields are the best, okay? The rental yields in Melbourne and Sydney are the worst in the whole country. You couldn't get worse rental yields here. In Queensland, we're still getting, on most projects, close to $1 per thousand. And in certain projects, a little bit more than that as well, better than that, okay, on certain projects. But otherwise, we're close to $1 per thousand, and the yield is very strong. As I said, there's a chronic shortage of housing, so rental demand is through the roof. We have zero vacancy. We have not had any client on settlement without a lease already in place for a long time now, several years, because of the shortage of property. And from an affordability point of view, that's why the interstate migration is what it is into Queensland, because people who are retired here in Sydney or Melbourne can sell $1 million or $2 million home, even $1 million home. They can move over there. They can buy themselves a beautiful 4-bedroom home for $500,000 and bank $500,000 in their retirement savings. So it's still a very attractive market. So we're looking at certain parts of Brisbane. Just be aware that within Brisbane, there are some markets we haven't touched since 2016, like the inner city. Stay away. There's an oversupply of apartments. It's been like that since then till now. We are nowhere there. So we've always been in approximately a 15-kilometer to 35-kilometer ring in certain areas, according to the research and the infrastructure investments there. Sunshine Coast, a fantastic market. Honestly, we've got some great projects there. I don't know if you know, but I did say it already, the largest hospital in the Southern Hemisphere, not in Australia, the Southern Hemisphere, the largest is in Sunshine Coast. And the university that trains the medical students is right there too. There's many pillars of employment in Sunshine Coast besides tourism, very good commercial, industrial. The medical is really strong, and education. And then Townsville, I've given you some information on that, and I put more of that information in here tonight only because it's new, but otherwise, in other previous recordings, I go into depth with some of the research for those other two areas, Brisbane and Sunshine Coast. So most affordable of the large capital cities, strong yields, zero vacancy, very good employment growth, very good infrastructure changes to trigger growth. The demographics point to infill townhouses and well-developed areas for house and land packages. Just to show you some of the options, we've got more than this, but just to give you a brief top of the waves on some of them. Townhouses, so everything we do, by the way, is new. We do not do secondhand properties, and the reason is in 2017, the tax laws changed and depreciation for fixtures and fittings, which is half the depreciation, half on a new home, is zero if that house has been owned by someone, even if they owned it for only 1 month and then sold it again. If you bought it brand new, you get zero depreciation on the fixtures and fittings. So to maximize your tax deductions, the new homes are highly tax effective, and they're under warranty, and the appliances are under warranty, and there's a defect period. So we have generally with our clients zero maintenance. So they're off the plan. Townhouses are starting at about $550 now, up to about $650. We've got house and land packages starting around the 600,000 range to $850, and we also have commercial property options available. All our options have a rental guarantee. So from when your property settles, it's called the first tenant guarantee. But there's no risk because there's no stock, so you'll get a tenant. So one area, I'll just give you an example, is Joiner. The price of these 4-bedroom houses, they've got 2 living areas. They're nice sized, over 200 square meters. They started at $725 up to just around the mid 800s, and the rent you can see is really good as a rental yield. This is an example of one. Why we like the suburb Joiner is because right up the road, the property prices for the exact same thing are $200,000 more. So like Warner, for example. So we know these are very well priced, and you kind of make your money just getting into them. That's what they look like. They've got good finishes, fixtures and fittings, stone bench tops, ducted aircon, good appliances, completely turnkey. You don't have to do anything once the house is complete. There's another project. This is our project in Sunshine Coast. I bought one of these myself. We do have some available. Now, these are 1 and 2 bedroom townhouses, and you might think, oh, Jeanine, I don't want a 1-bedroom. Who wants a 1-bedroom townhouse? Well, this project in Butterham is a replica by the same developer, 10 to 15 minutes south of there, also in Sunshine Coast, in a place called Meriden Plains, which we did in 2019. And they were one of our best yielding and growth, even though they were 1 and 2 bedders out of all the options that we had. So because they did so well, the developer who we did really well working with did this again in Butterham. So the reason these 1 and 2 bedders are so in demand is because of the hospital, and they took a bet on themselves back in 2019 from a KPMG research report that said there's a chronic shortage of 1 and 2 bedroom dwellings in the Sunshine Coast, but an enormous demand, and all they have is this forever 4-bedroom houses and a few 3-bedders. So they said, well, let's just take a bet on ourselves and follow that KPMG research, and that was a highly successful project. So we've replicated it again in Sunshine Coast. So sometimes people don't understand the market well enough, and they think, I just couldn't invest in a 1-bedroom. Well, my partner did at the time, and did really, really well. And all our clients who bought them, they still have them. They bought them at that stage. They've already made about 200,000 on that first project, the one that was down south. This is now in Butterham, and the yields are fantastic. So we're back in there again. This is what they look like. And this is not wood, by the way. This is recycled plastic. It never fades. It never peels. It never needs to be maintained. And it takes plastic out the environment. So they're beautiful. They've got these beautiful open stairways. They're just different. They're not the stock standard townhouse. To put open stairs like this does cost more money, but geez, it looks nice. They've got double volume ceilings upstairs, on the upstairs one. So this is the picture of the 2-bedder. So here's the price. They're between 550 and 650. 550 is the 1 bed, 650 is the 2 bed, and there's the rent. Then in Sunshine Coast, we also got the suburb called Aura. It's a huge master plan development, very, very well designed, beautiful. With the town center is not even built, and the growth is going to be significant. This is for a house and land package. Again, 4-bedroom house, 2 bathrooms, 2 living areas, about $850, and the rent $800 per week. Nice size home. Townsville, this is an example. So you can see in Townsville, the prices are really affordable in entry. This is a 4-bedroom house with 2 living areas at $630. I mean, it's incredible value. The rent is $1 per thousand, really good cash flow. Just very nice houses, well designed. This, by the way, is not only in Townsville, not stone benchtop. It looks like stone, but if you tap it with your hand, it's actually kind of a laminate. Looks very nice. For some reason, Townsville doesn't have stone benchtops, but they really present really well. Just to tell you, this is the end just of a couple of options I'm showing you. Stocklands are saying, this is their quote, with over 30 years experience, we have never seen the situation of no supply and a continued increasing demand. So when I say there's this chronic shortage, we do have a chronic shortage, and it's exacerbated in Queensland. So my suggestion is participate if you can, as soon as possible. One, land prices just keep going up. Literally every couple of weeks or months on some other, just depending on which area, they keep moving. So the sooner you get in, the more money you make. And from that first chart I showed you, when one market takes off, another one cools. When one market cools, another one takes off, is exactly why we have moved into different areas over the years, and why we've really cycled some clients out of their investments that they did with us 2 years ago or 7 years ago into new markets. So we are entering the market with the growth ahead of us. So we're always looking at that cycle, and once we've peaked anywhere, we don't go back to that market or put clients back in there. And just mentioning this because the other thing is, even with expressions of interest, if you saw something and wanted it, you do need to put an expression of interest in really quickly, because otherwise they sell it locally. We're very lucky to get stock. It's only through relationships, because the developer could sell it locally 10 times in a day. So for us to get stock for investors, we really do have to rely on our good relationships with them to get stock. Something else I wanted to tell you. It'll come to me. I don't know what something else I was going to mention. All right, just to show you some performance of our clients. This is Newport in Queensland. We put people in there in 2018 for 623. 3 years later, the prices moved to 852,000. So the client made 228,000 in a period of 2 years, and their cash flow was $160 a week positive cash flow. Meriden Plains is the project I showed you, but those townhouses 1 and 2 better that I said to that you in Butterham, we replicating it. This is the exact project. So 2020, 395. Okay, we actually started here in 2019. So stage 1 was even less than that. But anyway, 395. This person sold in a year later, a year and a half, for 498 and made 103,000. A really good result for a 1-bedroom townhouse in a short period of time. And positive cash flow, really good, $130 a week. Edmondson Park, this is where I had mine as well when I first bought from Mike. I don't have it anymore, I sold it. But look at this client. He bought in February 14 for 530. He was just waiting for the year to lapse where he gets the capital gains tax discount kind of thing. He's waiting because he wanted to go overseas. So he just, over 12 months, he lapsed at 13 months. He sold it 13 months later and made 185,000. Really good result. My house in this area, in Edmondson Park, Bardia, I actually sold in October 16, so a bit later, and I made less. So when we were telling clients to sell, we at the peak, Mike was right. Mike's timing was right because I made 180,000 on the exact same house. Obviously on the same address up the road. Rudy Hill, this is just a story about boosting your self-managed super fund. A guy came to Mike 3 years from retirement. He said, I only have 150,000 in my super fund. So Mike put him back then, 2013, into an NRAS property that they don't exist now. But this is National Residential Affordability Scheme, where the government gives you a $10,000 a year tax-free money because you supplying houses to people like nurses, paramedics, and so on. So he was putting 10,000 a year into his super fund to boost the balance. Plus, he bought the property, and after 2 years, he doubled his super balance. He made 151,000, sold it, put the money, doubled his balance, and you know, if it's you, for example, you just go again, you buy it again. So it's a really good and wise investment. If you've got more than, I'd say more than 180,000, even 150 you could probably do, but to be safe, 180,000 or more in your super fund, and you put a property in there, it's really clever. Anytime you sell it, you pay a flat 10% capital gains tax. That's like more than half saving, more than half. And if you sell it in retirement, you pay 0 capital gains tax, and it's got nothing to do with your own capacity because the self-managed super fund is an entity on its own, and you've got leverage. So if you've got a 200,000 super and you put a 500,000 property in, immediately your super balance is 700,000. So that's leverage. Now you're growing a $700,000 balance. Yes, you sell it and you take a couple of 100,000, slap it on top and do it again. So really boost your retirement savings putting property in there. This is another one. So this is also was NRAS, Edmondson Park. Look at this result here. The person held onto this longer than the 2015 when we said sell. They held on a bit longer. Look what they did. They made 484,000. They bought in the year we put the clients in, and they just held on to it. What a fantastic result. Honestly, the price almost 520 to $1 million. Really good. This is mine. This was my house in Central Coast. I first bought from Mike when I met him. I bought for 450. It was also NRAS. It was the year I bought it. I sold it for that. And I made 340,000. Oh, no, sorry, this is not mine. This is someone else's, but I did the same. So I bought one in there and one in Vidalba. So that's just a couple of options what we've done with some clients. Just in summary, the first thing before you buy property ever is establish the objective for buying the property. You've got to know why you're buying it. You can't say, oh, I'm buying it to make money. Of course you're buying it to make money, but why do you want the money? Once you've got a clear objective, you'll just manage your property portfolio better so you know where you're going. So we know where you're going, and we can definitely have that in mind and help you get there. We utilize the research to understand the exit point, and we will let you know when we think it's time to exit the market, take your profit and re-enter at the bottom of a new market and go again. So what we're actually doing is we're using property as a tool to achieve a certain financial objective. We're not attached to the property. We're not in love with the property. We don't worry about how many plugs there are, if the ceiling's that high or that. No, we use it as a tool, because some people get very excited on their first property and they want to make all these variations. I promise you, you won't rent the house for $1 more and you won't sell it for $1 more with paying for $10,000 of variations. It's an investment. It's a tool to grow wealth. Your own home, be all emotional, perfect. But if it's an investment, we always show the client the cash flow first. So, you know, dollar in, dollar out, because the numbers must make sense. The yield, these kind of financial indicators, and we're not attached. We just know that the research points to that. The infrastructure changes are there. Employment growth is there. Mismatch in supply and demand. We know what we're going to achieve. Let's go. And when the market's done what it's needed to do and reaches its peak, we get out. We pay the capital gains tax happily with gratitude, because you wouldn't pay it if you didn't make a gain. So we never say, oh, I don't want to sell because I love paying capital gains tax. It means I've made a gain. If you resent that, it's against a prosperity mindset. So capital gains tax is part of the game of growing wealth. So never resent it. Never have a thing about it. Just know, if you sell a property and make a gain, you're going to pay some money as tax, and then you just carry on and do it again. But you will still grow your wealth. So just to let you know, we don't charge our clients any fees. We're not buyer's agents. We are normally estate agents. We get paid by the developer. Same as if you sold your house, you'd pay the estate agent the commission for selling your house. So the developer pays us with the estate agent. We actively manage our clients' portfolios. And even if you've got 10 properties when we first meet, we will review all of them for free and let you know what we think of them and give you that feedback. And we'd also give you updates on those when we manage your portfolio going forward, and we don't charge you anything. As I've said, we don't advertise. We've got repeat business through the years, through our strong performance and giving clients the results. And as we do that, we get referrals. So if you do want to participate, my suggestion is get your finance assessed as soon as possible, and don't worry about the big detailed financial assessment. Just to know if you can or can't participate, ask them for what you call a top line assessment, give them the main numbers, and they can give you just kind of an indication. Once you know, yep, you've got capacity for whatever it is, then you can start the conversation. Then let's have a chat. Let's understand your objective. What are you trying to do? Do you want to reduce debt on your own home? Do you want to grow wealth for retirement? What is it that you're trying to do? So now I'm going to open the lines for any questions. And just to say this, these are the next steps. If you'd like more information on, do you want to understand your borrowing capacity? Speak to a broker. If you don't have one, I can recommend more than one. We don't have any relationship with them, so please understand, it's not because they're paying me anything. We only recommend people who do the right thing by our clients, give good service. If you're interested in purchasing a property in a self-managed super fund, let me know as well. Out of all the brokers I've ever worked with over the years, the one I use personally, is a lady, and she's got so much experience in self-managed super fund lending. You want that. Please do not use a broker who's got no experience on SMSF lending. They're going to make it difficult to get that property done. Go with someone who's got lots of experience, and it's seamless. It works perfectly. There's no issues. If you'd like more information about the options, I've only shown you a few here. Just let me know. Let's get together and have an initial chat. But when we have the chat, at the same time, find out your borrowing capacity that you know. If you've got properties, you don't know if you should keep them, sell them, what to do with them, if they're going to grow or not grow in the future. It doesn't matter where they are in Australia, and you'd like your property portfolio reviewed, happy to do that for you. There's no charge. All right, I'm just going to find the button here to open the floor for questions. All right, so if anybody has a question, please go ahead. Oh, and you can text me if you want a property chat. Just send me a text with your name and your surname, that I know who you are, and I'll get hold of you to make an appointment. And let me know also if you'd prefer a morning or evening appointment. I don't mind if it's weekends or evening. Most clients with property do it after hours because they're working. Right. Are there any questions from anyone? No? Not even one?
I was just wondering, Jeanine, are some of these properties furnished? I don't know what this idea of some of the having, what do you call them? There's some properties where you just rent them out for a short term, and so the properties come furnished. Do you do any of that?
One of our projects that we did in Sunshine Coast, we didn't market it that way, that it was already approved by council before we sold them for short-term rentals. But it's not something that we aim for. I'll just tell you, short-term rentals has got very, very high fees, and it's very tricky. It's got to be in the right market to have enough short-term rentals to make the whole model work. So you've got to look at the financial model. And Mike, over 25 years, has done all of these on and off. And if we had to choose between a kind of normal project with normal residential versus that, Mike would choose the normal residential, even though there's this element of, geez, there's a lot more money to be made on short-term rentals, but that's not kind of guaranteed. If we put you into the normal residential, we can say hand on heart, that's your cash flow to the dollar. It's only going to go up over time because rentals increases. These are your costs, and we know exactly what they are because some of the costs are seriously up to 15%. So if you think of agents' fees, they're very, very high. And then you've got cleaning fees, they're very, very high. So the model depends where or what, but it's not something that I'm going to say to you, yep, we definitely specialize in that. No, I'd rather say to you, you want a good investment and make a big chunk of money in the next 3 to 5 years, I can put you in front of that. So that's a cash flow chase. That one project we did, I bought one myself. It was an apartment in Sunshine Coast in a building called HQ by DevCon. It has got a short-term rental option and a furniture pack. You could pay 14,000. I can even do it now. I can get hold of DevCon tomorrow and say, I'll pay the 14,000 furniture pack, finish it out and manage it with a short-term rental option. I don't want to do that. The wear and tear is very high. And I've got no maintenance at the moment, zero. And I just have a feeling if I had short-term rentals, I'd have just things I don't need. And I'm after the buy it, forget about it. It's cash flow positive. And when we've reached the peak there, I'll sell it and make, I don't know, 150, 250,000. That's the goal, is the big chunks of cash in growth over a period of time with good cash flow holding it. But I don't want very high cash flow and potential unnecessary expenses because they can be quite high.
Now, if you didn't have a self-managed super fund, but you wanted to go that way, do you have the advice, or do you have?
Yes, it's much easier than people think. I'll give you my own example. I never had a self-managed super fund, and I maxed out on the properties I could buy in my own name. And that project in Sunshine Coast that I showed you, the staircase, it's called Nura. I really wanted one of those. I just know that project is going to do amazing, amazing. So I hadn't had, like, I heard from people to set up a self-managed super fund takes months or takes weeks and so much paperwork and it's a whole big thing. Mike said it does not. He said, get hold of this guy, Trevor. And he said, you can put an expression of interest in 2 days. He'll give you the name to put on the form. And it happened. I called Trevor. Mike used to be Mike's accountant years ago. He does other things now, but still in accounting. I got the name of my self-managed super fund in 2 days, put it on the expression of interest, sent it through. Within about a week, maximum 2 weeks, all the paperwork was there, printed everything out, where to sign was indicated, sign, sent it all back. It was done. The thing that took the longest was the rollover from my super fund into the self-managed super fund. That I had some issue with my super fund. I don't know what the issue was now, but I had to keep phoning and chasing them up. but you can definitely get into the property, and I think everything can be sorted out pretty soon. And it's just that when you start the process from as soon as possible, ask yourself, Money Super Fund, what's their lead time and what's their process whilst you're starting your paperwork, just that you know, so you can tell us, because if the developer is waiting for you to sign contracts or pay deposits and you need extra time, we need to know that and we can manage it for you, because we've got very good relationships. It's not like someone else where they say, well, you're taking too long, they'll just cancel the thing and pull it out from you. Yeah. Anything else? Raj, go ahead.
Yeah, so the properties what we are talking about is off the plan property. So it's a land and house package. So the land is not yet registered, right? So what is the time frame when the property will be?
So across our projects, so I can tell you that Stocklands in Townsville, the land registers, if I'm not mistaken, April next year, or something like that, something far away. Ours isn't. Ours registers now, August, for example. So you'll be building on it within 4 weeks of settlement, and depending where. So joiners different. We'd have to sit down with you and tell you which one. So some things, the land registers in August, some in October, some as far as November. So it depends on a client situation. We've got some clients who want that. They're buying the house at this price today, signing for it, but they're only going to start settlement, let's say, in November. For some clients, it suits them because they've got something to organize financially, or they've got to sell something, or so it just depends. So that's why meeting one is the most important for us to understand your objective and your entire situation. And once we've got all the due diligence done, we'll come back with the right thing at the right time. If you need to go now, go fast and settle and get moving on building that thing, yes, then we'll put that in front of you. So we need to understand each other before we're not going to come to meeting and say, hey, here's the property, we think this. No, the due diligence is something we take very seriously. So just a chat, just want to know exactly what you're doing, how you're doing it, what you owe, what you own. We've had clients who've got, for example, high debt on their own home and zero debt on their investment property. Now, when we saw that, we're just saying to them, like, do you understand the tax implications of that and how much money you're throwing down the drain? Take all that equity out of that investment property, every dollar, as much as you can, and keep that loan high, but definitely keep the loan on your own. Or they've got offset money on the wrong loan, that instead of having the offset on an investment loan, pay your mortgage on your own home down. That's the goal. If anyone here has got a mortgage on your own home, I just can't say strong enough. Your goal, I recommend, is to get that down to zero as soon as possible. Whether you think of moving, not moving, it doesn't matter. Because once you're debt free, you use as much equity as you can on your own home, and you get back in the investment market and you just grow your wealth. And it compounds. So that's my advice. Not that I'm giving advice. I'm not giving financial advice. I'm just saying what I would do. Got to be careful with my words. Anyone else? Any questions? No? Chat. Let me see. Okay, Jeanine. Okay, that's something. I couldn't unmute. I want to learn about property investment. Gloria. Okay, that was at 8 o'clock. Thanks, Gloria. Felicity, you mentioned display home developer. Do you primarily sell homes off the plan? We only sell new homes, Felicity. We don't sell secondhand stock because we want to maximize our tax deductions and be most tax effective. So we only work with investors. We want the maximum return. We want above average growth. By the way, the property, if I just talk about Sydney, when we put clients into the Sydney market from 2009 to 2015, the suburbs were Rudy Hill, Bonnie Rig, the Ponds, Edmondson Park. People say, why on earth are you going to Bonnie Rig? Well, there was gentrification going on. They flattened 80,000 council houses and were fixing up the suburb above average returns. Why would you go to Rudy Hill? Well, the M4, M7 was being built, the biggest interchange in Sydney. Many delivery or transport or logistics companies moved warehousing around there. Employment growth, demand for residential went up. Those properties doubled in value. They did really, really well. So they might have been funny suburbs. Like, why don't you go to Coogee? Why don't you go to somewhere pretty? Because from an investment point of view, we're looking for above average returns, and Mike's research is really good. And we're looking for the indicators that are going to cause growth. So just to mention, so off the plan is tax. New home is for tax deductions, and the area that we choose is very specific according to employment growth, infrastructure changes, demand and supply, and so on. All right, Felicity is super impressed. Thanks, Jeanine. Interested in the self-managed super fund purchase in particular. You need to duck off now. All right. Monica, why property, not shares? I'm not talking about shares. I'm not a financial planner. All I can say is that the wealthiest people in the world either made their money in property or hold their money in property. That's just a true statistic. I've done the Dolf de Roos Real Estate University years ago in South Africa, and we're in the business. So I like property. We'll never tell someone not to buy shares. I would say if you can, buy both. But I like property. You can touch it. You can feel it. Everyone needs a place to sleep. If something goes really wrong with a company, the shares could dive. People saw in COVID, geez, people lost a lot of money in the share market in COVID. Massive drops. Property shot through. So it's just kind of a stable investment over the long term. It always delivers. And if you've got the right research behind it, that's just what we do. So I can't talk shares. It's not what we do. I do have some, but I'm not talking about that as a webinar. I'm not here to advocate the shares thing. So I hope that makes sense. And then Darlene, how long do the properties take to build? Okay, so if it's a house and land package, anything from 6 months on some, even 5, up to 9 months on others. If it's a townhouse, you could get into a townhouse project that we're in now. It actually settles in August. So that's only 2 months away. So the project's been built in stages. We sold the earlier stages a while ago. It's really doing very well. So that's a short play. But the other townhouses that might have, I don't know, a 12-month period, it just depends. I think the question, Darlene, that would be better to ask when we're busy with the client is, like, what is their appetite? What do they want to do? Some people don't like a long build process, or they don't like to wait a long time. So then we find the asset that's going to satisfy them more. Some people don't mind at all. So then we'll show them the options and sometimes let them see what they feel is best for them. But with a house and land packages, they do have a build time because you've got to settle on the land first. So that's about anything from 5 to 9 months, depending on the house and the builder and what's happening there. Monica, thank you. Multi-talented soul. So sweet. Amanda, thanks, Jeanine. Keen for Trevor's details because we want to set up a self-managed super fund to buy our first investment property. We need to reduce our mortgage. Great, as the priority. Excellent. But have some funds in super to use. Great. Okay. Yep. It's just remind me. If you don't, I'll remember. But if I don't, you'll chase me up. Great. I'll make a note. Darlene, thank you. And thank you to everybody. It was a pleasure to have you here. Thank you for joining. I'll just stop the recording. Thank you so much.